Randy, we are staggering step by step through the tangible data through a new Fed policy. Dovetail the mystery around the table at the Eccles building. They have a new Fed theory, a new Fed construction, but we've got the same old data. How do they fit?
Yeah, same old data, but a new framework. That's exactly right. So we have this average inflation targeting framework that says rather than, well, when we see inflation coming, we're going to act now proactively. It says, no, we're not going to do that. We're going to wait until inflation gets to at least to our target or maybe even above before we start to act. And obviously, we've seen that because inflation has been very high over the last few months. But the Fed has said, hey, we're not moving until 2022, 2023.
Randy, are there any hawks left at the Federal Reserve?
Oh, yes. I think you see some of them.
Who are they? Because it sounds like to me there are doves and then there are super doves. Doves and super doves. And I see no hawks right now. Who are they?
Well, I guess that also changes in context, too. So you have someone like Governor Waller, who just spoke recently, who said, we got to get moving. We got to start tapering a little bit more rapidly because we see the economy coming back. Rich Clarida had a fairly optimistic view of where the economy was going, seemed to be discounting the role of the Delta variant, although he is certainly much more on the dovish side of waiting till end of 2022 before starting to raise rates.
Do you agree with Eddie Blanchflower, who was on the show earlier today, who is basically saying it's correct for all of these doves to be dove and dovish because basically the fact that we have this very low participation rate in the U.S. labor market is really a result of failed policy? Do you agree with that assessment?
I'm not so sure it's exactly a result of failed policy. I mean, I think there are a lot of people who've decided that, especially the older people who had come back into the labor market, who said, gosh, with all these uncertainties around health, maybe this is a good time for me to stay out of the labor market to retire. So I'm not quite sure that it's just policy. I think there are a lot of other things like the pandemic that, you know, it's just a shock that we really can't do. I mean, we can respond with vaccines and such,
right,
but it just fundamentally changes the way people think about going to work, going shopping.
Professor Kroszner, you represent the land of microeconomics. Macro is just more microeconomics at Chicago. Professor Kroszner, how do you address the dynamics forward of our immense demand and supply imbalance?
So this is a really interesting question where policy has a very large role to play. Obviously, we've seen extraordinarily easy monetary policy and a commitment for that for a long time. Unbelievable fiscal policy, just unprecedented. You've heard that term a million times, but it really is true. We're either have spent or planning to spend on the order of 50% of GDP within an 18-month time period. That's just absolutely extraordinary. Plus, you had all the pent-up demand, the high savings that people had built up when they could go out. And so that's all being unleashed. And so obviously we're seeing that in terms of lots of price pressure, combined with some one-off factors like the chip shortage that you were talking about, like other supply chain disruptions. So we're going to see a lot of price increases in the short run. The key question is, are those transitory or are those sustained? I think we're going to see them transitory for a while. I don't think they're necessarily going to be sustained over the year to 2 year horizon, but over 6 months horizon, I think certainly.
Randy, I don't want to talk about projections. I want to talk about how we'd respond to outcomes. So help me understand this from a Federal Reserve perspective. If a higher rate of inflation persists, and it's primarily attributed to supply-side constraints, but those supply-side constraints also persist, how long before you have to take notice of that?
Yeah, that's a very important issue because now it's sort of described as one-offs. You know, there's some supply chain disruptions, but within 6 months to a year, they'll be eased. High demand for used cars. There are a lot of particular explanations each month. But if those accumulate over time, and in particular, if those start to change people's expectations, so that people are expecting that, well, gee, I need to get paid more in order to consume, and companies say, well, I can push price increases in a way that I haven't been able to do in a decade or two to accommodate those higher wage increases. You can get into this cycle where inflation starts to take off and become more permanent. That's really the key. Can they keep inflation expectations well anchored? We'll see.